from CES in Las Vegas is Deere CFO Josh Jepsen. Josh, it's great to have you on. Welcome.
Hey, Morgan. Thanks for having me on, and great to be here coming from CES, where we're highlighting automation this year and the criticality of automation to take care of some of our customers' biggest challenges.
All right, so let's talk about it. What are we talking about in terms of automated tractors and combines and vehicles, and how does that address some of these challenges for farmers and customers?
Yeah, certainly. It's really all about how do we drive more productivity, help our customers do more with less. And automation really helps, particularly when you think about availability of skilled labor, which is a challenge for all of our customers, whether it's a row crop farmer operating a combine like you can see behind me, or a road builder with an asphalt paver, which we're also showing here at the show, which is really, really important for us. So thinking about how do you take every decision that an operator makes, and how do you automate that, which takes us one step closer, really brings us to the doorstep of being able to do those jobs autonomously.
Yeah, and I've been covering all of this tech integration that you've been bringing to Deere for a number of years now. I mean, you have a very high-profile contract with Starlink, for example, on connectivity and all that data that's coming from space. When we talk about precision agriculture, where are we in that process, and how much are farmers, our customers, leaning into the adoption and digitization of everything?
Yeah, we're seeing significant appetite and adoption and utilization, importantly, of the technologies. You know, one of the things we look at is engagement in our digital platform, the John Deere Operations Center, to say, are we seeing farmers engage? Are they leveraging these tools? And we surpassed our goal that we had set for 2026, which was 500 million engaged acres. We actually did that a year early. We eclipsed that mark here at the end of 2025. That's just one way that we look at, are we adding value through these technologies, and are customers using those across all the jobs they do in the field, whether that's planting or spraying or harvesting.
So talking about productivity, how about affordability? Because the Trump administration has been pretty vocal about wanting to see prices come down on farm equipment and see farm machinery become more affordable. So how do you do that?
Yeah, I think there's a couple things. One is all about how do we drive more profitability for the customer, and how do we make sure that they're seeing those outcomes, and that's really important to us. So that's one. The other is creating different options for our customers to be able to drive better outcomes and differences in terms of how they get into those technologies. So not only like on a brand new piece of machinery you see behind me, but also the ability to retrofit their existing machines, which allows us to get customers in new technology at a lower price point, and they can start to see some of those benefits. So we think about that not only from a brand new piece of equipment, but all the way back through, you know, what are machines that they already have in their fleet that we can upgrade and retrofit to deliver better outcomes for them.
How do tariffs fit into all of this, either from a machinery-specific standpoint or even from a knock-on effect when you look at agriculture and where we are in the cycle? Yeah,
there is definitely cyclical pressure that we're going through from an ag perspective, and we've seen that, you know, reflected in demand for us in 2025 and as well as into 2026. There's uncertainty that has been created as a result of some of the trade tensions and the like. You know, some of that has begun to dissipate as the administration's had trade deals and purchase commitments. Those things have definitely helped, but there is uncertainty in the environment, and we're seeing that reflected with our customers' demand profile. You know, we expect our large ag business to be down in North America again this year, and that's really one of the impacts there.
Yeah,
from our perspective.
Go ahead.
Sorry, from our perspective, you know, we see additional tariff impact in 2026, you know, about double what we saw in 2025 from a value perspective. And that's really on the things that we import into U.S. to build our machines. You know, we're very U.S.-centric. 80% of what we sell in the U.S. Is built in the U.S., but there's still a tariff burden because of the interrelated and global network of supply base that we use.
Yeah, we just talked a little bit about North America. You obviously have a big South America business too, particularly in Brazil. I mean, just given what we're seeing from a geopolitical standpoint, the events in Venezuela, for example, how are you navigating all of that?
Yeah, Brazil's a huge market for us. You know, we actually had a large event in June of last year there, you know, highlighting the importance of that market from an agriculture perspective, as well as, you know, what it means for us and what we can do to deliver for our growers and customers there. So really, really important. We're continuing to see, you know, how the environment continues to shake out as we look through geopolitical concerns. we've worked through a lot of different issues, whether geopolitical, economic. We're confident in our ability to continue to execute. And from a Venezuela perspective, a relatively very small part of our business today.
Okay. Josh Jepsen, CFO of Deere, great to have you on.